Hey everybody, it's Mark Yegge. Hope you're doing well. We got a green market, and today is what is today? May 17th, 2024. Just got off a wonderful call with my mastermind group, and we had an interesting discussion about some stuff. But when the market's green, this is when you push on the accelerator pedal. The odds are in your favor, the probabilities are in your favor, and you might as well take advantage. So I hope you're doing that. Let me talk about what I'm seeing out here in the market, and you can decide for yourself what you're seeing in the market. So right now we are in a green market, like I just mentioned. We got 4 green lights. Everything seems to be going up. We called the green market about 11 days ago. And when I say green, I don't mean like it's green forever. Sometimes I do when we get all the things moving in one direction. I might call like a secular bull market, like I did last year on January 9th, and say everything's going to be moving up, everything. But a lot of things are going to be moving up. And so right now, we play the market, I call it the primary trend. So the market trends up and then it takes a breather, and then it trends down a little bit, takes a breather and goes back up. And that's what we've been in for almost, a year and a half now is, a secular bull market, but we are now in a brand new green primary trend within that. I hope that makes some sense. And the market is a tailwind in your trading. So if you get the market behind you, if you're sailing into the wind, it's a lot harder. You got to tack. But if you get the tailwind going, you don't have to do quite as much work to make headway. In fact, you get a little bit of extra boost. Here's the NASDAQ sitting at an all-time high and had a breakout, not a breakout, but a gap up a couple of days ago with some pretty good energy. I don't know what that was all about yesterday with the big sell-off, but it wasn't much of a sell-off. It was just a high volume candle. Really weird, but everything else kind of looks the same. S&P 500, Dow Jones is hitting a double top. I think it's probably going to break out of this $40,000 level. And then I think you're looking at 40,200 for just a quick little run. And then I think it probably moves up to, 42,000 over time, especially when you listen to what I have to say in a minute, because I'm going to talk about why I think that. The New York Stock Exchange looks very similar. It's basically just breached an all-time high. And that's because the volatility has really come out from 21 all the way down to like 12, which means that the fear is out of the market. And so people are getting back in the market. And I'm going to show you why on the next slide. This is a slide of the 10-year Treasury yield. Okay. This is how much they're paying on the yield. And it doesn't really matter what it says as far as numbers, but the trend matters. And you can look at the last 4 or 5 weeks, you're seeing it drop precipitously with a gap down below the 50-day moving average and now hitting the 200-day moving average. In other words, the Treasury market is telling the Fed, we know you're going to lower rates. You have to lower rates because you're raising rates on yourself. And when they lower rates, that means they're basically putting more money into the market, which raises rates. That's the irony of it. But it creates more inflation. And so the Fed is going to have, they're backed into this corner where they have to lower rates. Well, they're not going to tell everybody they're going to lower rates. They're going to maybe say they're going to do an emergency lower or something like that. But it's an election year, so they're not going to do anything crazy that makes the market crash because they want to be reappointed. And so it's this whole dichotomy and playing against itself. But the Treasury market is telling the Fed now what it wants the Fed to do. That's the weird thing. And the Fed kind of has to do it. And the smart money on the street is dictating this chart. And you can look at the bank index. And now here's how the bank index works, everybody. Banks are required to hold treasuries on their balance sheets. Well, when the rates are going up, treasuries move in inverse proportion to the rates going up. So they've been going down for the last year and a half or so as the Fed has been raising rates. Well, now the market's telling the Fed, hey, you've got to lower rates, which improves the balance sheet of the banks, which is why the bank stocks are all going up. If you look at JP Morgan, it's in a breakout. It's at an all-time high. It's breaking out right now. And so Bank of America looks like it's going up higher. That's because this whole sector is moving up higher because of what I just mentioned about the Fed. So don't listen to the news. They don't have any clue what's going on. Listen to the charts. Listen to yourself, because some of these things make a lot of sense. Okay. Apple, I've drawn some lines on here. There's a couple of spots on the chart that it wants to go to. Those are resistance lines. There's 2 little lines jutting out. And then there's a resistance line. It's a trend line on the way down. So you can see that. And it's broken through that. So that was a resistance. Now it's a support line. So support lines tend to get tested at some point. But right now we're looking at Apple at 190. Apple wants to go higher and test that 196 and that 199 level. If it gets to the 199 level, it's going to need some volume to break through it. But my suspicion is it's moving up into that as they're going to getting ready to release their iPhone 16 or something and the new chip and all that. And so the stock is also doing a buyback. And so that's all accretive to the stock. That's why you're seeing it move up. Tesla is finally, has made its bottom. It's got a couple of gaps up, and now it's trying to move up a little bit higher. Not a lot of news going on. Elon Musk is trying to get his pay package reinstated, and we don't know how that's going to break out, but I suspect that he's going to get his pay package reinstated. He got it taken away from him by some dumbass judge, but you can see where I stand on that. Alphabet just released this amazing Gemini product with amazing other AI products all around it. And the day before, Microsoft released their open AI product, and they went crazy because that was an awesome thing. And then Gemini actually came out with something even better the next day. So I know I was saying a couple months ago that I think that Google really screwed up their AI, and that's why you see it in the chart that it kind of went sideways for a while, and then it finally gapped up. So it went down to 121, and now the stock is at what, 177. So when it was having all those woes of releasing that AI product, it went down a lot. Now it's kind of back up, and it's at all-time highs and probably going higher based on that really good release. So it's why you have to look at the charts. You have to kind of keep an eye on stocks because things change fundamentally, and they change on the chart too. Amazon, not a thing wrong with this one right now. It's kind of having, it wants to go up and go to that all-time high. It went there, couldn't hold it, probably going to touch the 50-day moving average, but it's still trending up. Microsoft went below its 50 and it stayed there for like a month. But Microsoft, even though they had that open AI, they're the leader in AI technology. They've been leading for like a year. That's why the stock is up so much. But they're having a little trouble making newer highs. We're going to have to keep an eye on that because I'm a little worried about Microsoft, especially in light of all the other AI plays that are coming out. For example, I'm thinking about canceling my open AI subscription because you can basically get all the stuff they offer with a $20 a month subscription for free. So why would I pay $20? Not that it's that much money, but you know what? If you can get it for free, why pay $20? That almost might buy you a hamburger at McDonald's. All right, on Semiconductor is back above the 50-day moving average. This has been a rough play this whole last 6 months. It's just, since the gap down back in last October, I think it was on earnings, it just hasn't been able to get out of its own way. At least it's back up over the 50-day moving average, and we'll see if it can hold it. JP Morgan, part of that banking group, looking at that, making all-time highs and breaking out right now. That's one to keep an eye on. Bank of America looks the same. It's breaking out. This isn't an official breakout, but it is at least breaking above its 38.49 level. And, it's one of the top 4 banks. I don't think there's anything wrong with that one. Netflix, I've been talking about for months. Like, look, you got to get in Netflix. You got to start playing Netflix. And we had a big gap down a couple of weeks ago, but it's made back that whole gap, and now it's back above the 50-day moving average. Listen, I could talk a bunch about stocks. If you want to know more about what I talk about, I give you market updates. I give you my stock list, my watch list, my power lists, my short lists. I give you stocks of the week. You should have seen ANET earlier this week. I put that out on YouTube, but I also put it out to all my subscribers. That's what I'm suggesting is if you want to get this information delivered to your inbox, join the Insider Tips subscription that we have. It's free. You can go to cashflowmachine.io/tips and sign up for it right then, and you'll get all the information that I send out on a weekly basis. And I'm cranking up the information lately because we've got information about covered calls and how you can make 2 to 4% a month on that. We've got information about stock trading and breakout stocks. We're doing a lot more work on that. And if you want to be part of that, we've got courses to teach you how to do it the right way. And hopefully those courses pay for themselves in a very short period of time because they are a methodology that puts probabilities on your side. Don't want to be a commercial here, but I just wanted to tell you that we do have some stuff for you and you should take advantage of it because most of it's free. So thanks for being here. I hope you have a fantastic weekend. We are open all week next week, but the week after is Memorial Day and we'll be closed on the following Monday. So have a great weekend, everybody. And thanks for joining me. I'll see you next time on the weekly market update. Take care.